Welcome back to Tech Tune-Up. I'm your host, Paul Meeks, brought to you by Harvest Portfolio Management over my shoulder, where I'm the CIO and primarily run a public equity tech model. And also, of course, as always, my friends at Benzinga here on their YouTube channel. Please like and subscribe, and also consider Benzinga Pro Tools. I have a lot of experience in the business and I get value add out of them. So as usual, we will talk about some of the stock specific, company specific breaking news stories. Then we'll delve into the tech stocks and some of the defensive tech surrogate stocks that I like now. And then a couple of important tech trends that I'm seeing. So first of all, without further ado, let's get into Apple. I get a lot of questions about Apple directly from investors and also from all of the media outlets. And I will tell you this, even though Apple seems to be out of the woods in the short term with this tariff relief on consumer electronics, I don't know if that is a permanent plan or if the Trump administration and our buddies over in China will go back and forth on this. But I will tell you, despite its rally, because the stock had been hammered, I probably stay away from Apple. Because one of the problems with Apple is, even before the tariff news broke, which could potentially increase the cost of their iPhones by about 50%, this company had a sales problem. It hadn't grown for about 4 years. The revenue forecast for this year is 4% growth. I don't think that that's achievable because one of the problems is the Wall Street analysts who are bullish on this name have always felt that putting artificial intelligence features on an iPhone would drive what they like to call the mother of all iPhone upgrade cycles. Well, that didn't happen at Christmas time, and it hasn't happened since. So here we have a company that probably goes into year 4 or 5 with no to little total revenue growth. And now its costs go way up. That is the ultimate profit squeeze. So please don't get tempted to buy Apple. I'd still stay away. The problem is twofold now, not just one-fold, as I started talking about here on this broadcast over a year ago. The other thing I think is interesting is right now, Wall Street consensus estimate, and they haven't taken their estimates down yet, even despite this tariff beating. Wall Street thinks that this company is going to earn about $7.25 EPS this year. Now, Apple has a September fiscal year. I think worst case scenario with these tariffs, that number is 20% too high. That number at the end of the day could be $5 plus earnings per share this year, not 7. And I think even in a best case scenario, you're still going to take about a 10% hit. So far, the numbers have not been lowered. Maybe companies are waiting for Apple to report and guide to the future when they announce their results in a few weeks. But those numbers must be coming down. And no matter how cheap a stock is, you cannot buy it even as a value buy if the earnings estimates and revenue estimates haven't come down and hit their troughs yet. So keep an eye on that. So next we have AppLovin. AppLovin, I've been talking for a long time. I like the fundamentals, but as you may recall, the stock, despite reporting its last quarter, which was absolutely brilliant, and the stock went way up that day. On February 26, 2 short sellers came out with accusations, followed by another one a few weeks later. And now we have, I think it's firm number 4 or 5, harping on this as a short idea, a company called Hedgeye just releasing its own report. So I think what happens is we're not going to be able to wash any of these accusations, even if they may not be true, until the company gives us more data and another meet and beat quarter. That won't come until May 7th. So in the meantime, I'm hoping that this stock finds a bottom at its 200-day moving average, which is $227 a share. Unfortunately, if it breaks that key support level, there will be some more hell to pay, and I'll be wrong. But right now, I'm sticking with it. I'm not adding to my position. The position that I bought was in the 300s on this name, and I'm hoping that we find stability at the 200-day at 227, and I hope that we launch the stock up on May 7th when the company reports a good quarter, and also when it puts, hopefully, some of these short sellers' accusations to rest. Next, this is very interesting to me. Meta. Meta is now in court with a suit that the Federal Trade Commission brought during the Biden administration. So I imagine, even though I don't know much about legal stuff, I imagine that Trump could have squashed this, but no, letting this trial continue even under his reign, the Trump administration. And what they could, if the courts find that Meta is in violation, they could force the company to spin off both Instagram and WhatsApp. That would be interesting, but I will tell you this. Usually, these forced spin-offs are at least bad news initially, but if they're good companies and the company can go forward with at least some sort of relationship, so these three split up companies can now leverage each other, or at least still leverage each other somewhat, sometimes it unlocks shareholder value. Sometimes when you get three pieces, the sum is greater than the whole. So we will see what happens. But even if it breaks against us, I actually don't think it could be that material for shareholders. Of course, the news media will be all over it. So next, interesting story about Amazon. Of course, Amazon, like everybody else, is coming up with their earnings report. But you probably caught the CNBC interview between journalist Andrew Ross Sorkin and Amazon CEO Andy Jassy. Long story short, he confirmed in the interview that their own AI infrastructure spending will continue apace. I think when your hyperscalers report their results in the next couple of weeks, every one of them will confirm their AI infrastructure building forecast, except for maybe one, and that's Microsoft. Microsoft has just been acting squirrely and avoiding questions about this. And of course, when I talk about AI infrastructure spending, the biggest beneficiary is Nvidia. And so we'll see what happens. But I think we'll only get pushback on AI infrastructure spending by Microsoft. So we're upcoming to an earnings blitz, right? Companies announce their results about right now for the quarter that ended March 31. The US banks typically go first in the earnings reporting cycle, and they have. And now we'll be getting to some of the marquee tech names, not just the Mag 7, but many more over the next couple of weeks. Now, I'm a little bit torn about this earnings season. I don't think there's that much of a threat that any of these marquee tech companies will miss their near-term earnings, i.e. for the quarter just ended. However, I don't know if they're going to be able to guide with a lot of confidence, particularly those like the consumer electronics companies that are going to be bit by these tariffs. I mean, how could they give you clear guidance when they don't know what the tariff impact is going to be, because it's on again, off again, on again, off again, and at different rates with China and other trading partners. So unfortunately, I think we're going to get a little great taste, less filling, like the Miller Lite ads from the 80s and 90s. So we'll have a confirmation of the long-term themes of the fundamentals. You'll probably have pretty good quarters. Some companies will choose not to guide forward. Other companies will, but I just don't think when they get to that portion of the quarterly webcast, when they talk about the future, they're going to give us a lot of confidence, particularly if they have anything to do with importing components and finished goods into the United States with these tariffs, particularly Chinese tariffs. And everybody knows the company that's going to get mangled the most from these tariffs, unless things change, is Apple. So we do know that the Trump administration gave at least a temporary reprieve on consumer electronics, but then the Commerce Secretary follows up with a call over the weekend in an interview that these are just temporary. So unfortunately, you have Trump, you have Commerce Secretary Howard Lutnick, and you have Treasury Secretary Scott Bessent, who's from here in Charleston, South Carolina, where I live, sometimes giving conflicting messages on all these news programs. And Wall Street hates nothing more than uncertainty. As I've told you before, I'd rather have a certain really bad outcome than uncertainty. The last thing I should probably mention before moving on is the story just broke today that Hewlett Packard Enterprise, ticker HPE, and think of them as one of the beneficiaries of AI infrastructure building because they build servers that go into data centers, is now threatened by an activist shareholder, Elliott Management, and they took a big stake, even for an activist. They invested $1.5 billion in this purported turnaround over at HPE, and that's 8% of the company's market cap. So we'll see. I'm not very optimistic on servers, and that includes Supermicro, that includes Dell, and that includes Hewlett Packard Enterprises, symbol HPE, because first of all, we have some questions about continued AI infrastructure spending. And second of all, one of the biggest contract manufacturers in the world, who is known to exist on razor-thin margins, Foxconn, the company that makes the iPhones for Apple in Asia, is now building their own data centers. And so will you get the most ruthless cost cutter of all time in that space? It's going to hurt the profit margins for all the US players, because those US players, among other things, do not have the cost advantage with their labor that they do in Taiwan and China. So let's now move on to some of my tech picks. Bottom line, guys, I am still in the bunker. Don't go on these shows, including my own, and have nervous energy that makes you do things that you should not, which are your herky-jerky trading, until particularly this tariff situation clears up, and maybe we get through these quarterly conference calls, which is a data download in the next 2 or 3 weeks. I just don't have the confidence really to buy much of anything, unless they're defensive stocks that typically are not tech stocks that I can hide in for the time being. But you can take a look at this list here. There are some new ones. The ones that are in green, if I was to receive your money today, Tech Capital, I'd invest in them. I would buy Palantir. I would buy T-Mobile. I would buy Take-Two Interactive. I would buy the gold ETF, GLD. Obviously, that's not a tech stock, that's a bunker play. And Duke Energy, which I think is a pretty safe utility play, but it does have some upside catalysts. I've told you last time that I've been heavily involved recently in the drug distributors, such as Cencor, Cardinal Health, and McKesson. And as you know, because I talked about it for months and months now, I invested as a private investor in an earlier round in CoreWeave, CRWV. Think of this as a Amazon Web Services cloud infrastructure company really focused on the AI opportunity and exclusively using Nvidia's chips. So that IPO has come and gone. My purchase price is 48. Stock's now about 44. I think worst case scenario, there's downside to $36 a share, which it has already been in the few short weeks that it's been public. But when they announce their next quarterly results, I expect this stock to pop. So I'm sticking with it, and we'll see what happens. Other stocks that I'm interested in, probably not just CoreWeave, but now I'm particularly as a techish play, but not necessarily based on AI infrastructure building, which is essentially buying more hardware and infrastructure. I do like some of the cybersecurity plays, right? I think Palantir is probably in that ilk, but also Fortinet, Checkpoint Software. I'm poking around Palo Alto Networks, but it's the one I like the least in that group. But I think these are potentially interesting plays. And, I've also told you many times about a way to hide during this carnage is in some of these subscription models. So yes, no surprise, I owned Netflix in size, and I even own a little bit of Spotify. So with that, let's get on to some of the tech trends. If you are a tech or otherwise an aggressive growth investor, you have to be all over the path in interest rates. So the CME FedWatch tool tells us today that there will be no move in interest rates by the Federal Reserve Board when they meet shortly. But the following meeting, which I believe is June 18th, it looks like there's a 2/3 shot that the Fed at that point will lower its benchmark Fed funds rate by 25 basis points. But of course, I've told you many times before, the Fed has a very difficult job now because ever since its beginnings, it has had a twofold mission. One is don't let inflation get out of control. And they do that by tight monetary policy, raising interest rates, which is usually bad for everybody. And then also, don't let Americans be fired en masse. Don't drive us into a recession. Try to keep a bead on employment. And so the way I look at this is inflation should be up with tariffs if they stick and are not just a negotiating tool. On the other hand, the longer we have this uncertainty, right? Even if this uncertainty continues for, let's say, a couple of months into the summer, I think that so much damage will be done that the U.S. will have a recession, even though it might be just a temporary one. And of course, that is the greatest threat of all, stagflation. You have inflation and a recession. That would uber suck. So we'll see what happens. I feel sorry for Chairman Jay Powell and the rest of the Fed. The most impossible job, particularly when Trump and company are looking over their shoulders as backseat drivers. We'll see what happens. So the tariff uncertainty has gotten me spooked. It keeps me in the buyer strike, right? I told you I got a lot of cash. I gave you tech ideas that I think are relatively defensive. And then I gave you ideas that are not tech at all, that are uber defensive, like Duke Energy. What is a tech investor doing buying an electric utility? Well, that's why I will tell you that at some point I will turn. And since we get together every Tuesday morning at 11:30 Eastern time, just wait. I will be the first to call that when I'm comfortable doing so. Not yet, and I don't think I will be until we get some smoke clearing after these next round of quarterly earnings reports. So that's probably give me 2 to 3 weeks to absorb that data and make that call. Right now in the bunker, nothing wrong with that, man. Nothing wrong with that. Don't get nervous energy and do something stupid. So now let's get to the questions as we always do. I had one there at the bottom of the screen for a second. Can you repeat that question? CoreWeave. Did you just say that data centers are going to be hurt by Foxconn getting into the space? I think that data centers won't be hurt. They actually will be helped because they may be able to populate those data centers with cheaper servers built by Foxconn rather than those built by Dell and HP and Supermicro here in the States. When it comes to CoreWeave, right? So CoreWeave builds data centers chock full with GPUs from Nvidia. Nvidia is actually a pretty big shareholder in the company. And so what we need for them to be successful is to continue to get contracts to build more data centers, because the AI large language model inference and training continues apace, which I think it will. And I think that they will confirm this when they report their first quarter as a publicly traded company. Now, the ones I stay away from, because their margins are going to be hurt, benefits everybody else, but their margins are going to be hurt, are the Dell, the HPE, which you saw is being attacked by an activist today, and Supermicro, which unfortunately over the last year or so has had an accounting scandal. Thoughts on Marvell? I like Marvell, though when I come to taking a look at semiconductor companies that are helping these hyperscalers build their own GPUs so they don't have to rely on Nvidia so much. They'll always rely on Nvidia, but some are trying to build their own cheaper GPUs as substitutes. I prefer, instead of Marvell, Broadcom, ticker AVGO. I've owned both stocks. If I feel better about AI infrastructure spending acceleration, I may get back to Marvell, but right now, just own Broadcom to play that trend. Your thoughts on TSM, UPS, and J&J? Well, J&J is a pharmaceutical manufacturer, so if I know something about that, I'm not spending enough time covering tech stocks. But I will tell you, the stock here that I do like, though if you take a look at my buy list, it's in yellow, which means it's on wait and see mode because of the obvious near-term concerns. I do like Taiwan Semi. No one in the world, including Nvidia, can go forward without Taiwan Semi's manufacturing process. And we will bring some manufacturing to the States. But what semiconductor manufacturing are we going to bring to the States? Well, it's primarily Taiwan Semi just building chips for us in Phoenix, Arizona, rather than Taiwan. So it's obviously down with all the worries, particularly with tariffs and a potential attack by the Chinese on the island of Taiwan. But out of this list here, I'm a Taiwan Semiconductor fan, and I would buy it here, though I want to hear them confirm some near-term good news. But you could buy it here easily if you truly had a long-term perspective, and you won't come back to me tomorrow and say, hey, Paul, it's already down 5%. It is a worldwide necessity, Taiwan Semiconductor. All right, guys. If you have a follow-up question, remember, I am back every Tuesday morning. I'm also super easy to find, and I'm happy to follow up with anything you like. I am here to help you. In the meantime, remember, buying strike continues. Don't be chased into chasing stocks because it's just madness right now. Let's at least wait until we get through this round of quarterly reports. So I'm going to sign off. I look forward to seeing you again. Make sure you like me, you subscribe to me, and you support our buddies at Benzinga. Thank you very much.